Hello, everyone. My name is Elizabeth Desmarais, and I'm currently a senior in the Applied Investment Management program at Marquette University. And today I will present PLYMOUTH Industrial REIT, ticker PLYM, with a current price of $23.31 and a price target of $28.58. PLYMOUTH has a market capitalization of $745 million and was founded in 2011. The company went IPO in 2017 and is headquartered in Boston. On the right, you can see the revenue of 2019, 2020, and 2021 estimates. PLYMOUTH focused on single-tenant properties with lease term less than 5 years, as well as multi-tenant customized properties. The company has a total of 179 properties that are located in 12 markets and 11 states in the United States. In 2017, the company started with $155 million of real estate property and has now grown its portfolio at a 54% CAGR since going IPO, and they have a total portfolio that includes $862.6 million of wholly owned industrial properties. They also have a very diversified portfolio where their highest tenant industry, which is logistics and distribution, only account for 27% of their annual base rent. So far, 88% of their 2021 expiring lease, which account only for 3.1% of their ABR, were renewed already or leased to new tenants. The company also focused on Class B properties, which are lower priced but provide higher yield. The current occupancy rate for last quarter was 96.4%, and they have a dividend yield of 3.67%. For the last quarter as well, the company has had rent collection of 99%. Accordingly, it is recommended to add ticker PLYM to the AIM Small Cap Fund with target price of $28.58, representing a 22.58% upside. PLYMOUTH has been focusing on maintaining its lease growth momentum in diverse industrial markets. Accordingly, in the third quarter of 2021, the company acquired 4 new properties totaling $105 million. This covers 1.8 million square foot and yields 7.2%. The company really has been focusing on footprint expansion, and the majority of its commencing lease hold a minimum lease term of 6 months. As of now, the company was able to renew or lease their space to new tenants for the leases that are expiring in 2021, and accordingly has seen rental rate increase by 9.2%. So far, in the fourth quarter, the company closed acquisition of $93 million for 4 new additional properties. There is currently 0.8 million square foot of investment under agreement that are expected to be completed by the end of 2021, according to management. My second driver is logistics-based demand. Supply chain disruption has led to an increased demand for logistics facilities. Accordingly, logistics-based demand doubled since the same period in 2020 and has hit a record high of 110 million square foot and market assumption of 194 million square foot as well. Logistics and transportation is PLYMOUTH's largest tenant industry and take up to 27% of their annual base rent. With the new acquisitions that were made in the past year, especially in the last 2 quarters, these new acquisition and rental space will respond to this demand. The company was able to maintain its rent collection of 99.4% in the last quarter, and demand will contribute to higher rental income for the company and keep this rent collection. My third driver includes e-commerce and e-fulfillment. E-commerce growth and online purchases directly impact industrial rental properties. Especially with COVID, we've seen e-commerce sales go through the roof. This keeps continuing. Retailers are expanding their distribution network and increasing their production level to respond to the demand. They also want to expand their logistic networks, which requires more rental properties. Higher production levels require more rental space, and first-year base rent has increased by 9.7% over the years due to the high demand. E-commerce accounts for 16% of industrial and logistics leased in the United States, and Plymouth's largest industry include logistics and transportation. Accordingly, every additional $1 billion of e-commerce sales needs 1 million square foot of space. E-commerce sales are expected to reach $330 million by 2025, therefore increasing the demand for storage. The e-fulfillment service market also expected to grow at a 10% CAGR to 2025, which are required in the logistical and transportation place for retailers. To reach an interesting value for PLYM, a 5-year DCF model was created. It used a terminal growth rate of 1.25% and a WACC of 5.67%, which resulted in an intrinsic value of $32.17, an upside of 38%. Also, a net asset value model was created using a capitalization rate of 6.5%, resulting in a $25.90 intrinsic value, giving an 11% upside. Also, a price to FFO multiple valuation was calculated using a 2021 estimate price to FFO of 12.39 and an average multiple of 16.5, resulting in a relative value of $31.05, giving a 33% upside. And lastly, a price to net asset value was calculated using a 2020 price to NAV of 0.92 and a weighted average price to NAV multiple of 1.2, which resulted in a value of $24.71 and a 6% upside. By weighting this model 30-30-20-20, a price target of $28.50 was reached, representing a 22.58% upside. Here are some of the risks that I took into consideration when evaluating PLYMouth. One being tenant default and replacement. The company owns properties that really differ from other industrial REIT and that are specific to certain industry and provide specified leasing space. Accordingly, tenant default will negatively impact the company and make it more difficult for them to find new lessees that could replace and occupy that special space. The second one is multi-tenant uncertainty. As you know, PLYMouth owns single and multi-tenant properties, and they're rented by different occupants. The more tenants of multi-properties results in greater uncertainty to the tenant's replacement when leases expire. Additionally, it requires extra maintenance responsibility due to the shared common areas, which is something that did not need to be taken into consideration when industrial only have single tenant properties. The last one is retention rates. If the company fails to retain its tenant or find new tenants for their new acquisition or new building, the company will struggle generating rental income in those new location or existing location where default is high. PLYMouth is currently entirely not managed. Jeffrey E. Withrell is the chairman and CEO of the company since its foundation in 2011. He has over 25 years of experience in real estate investment, development, and banking, and has a lot of experience with REIT. He worked as an investment executive for Franklin Street Corporation. He was also engaged in the formation and operation of PLYMouth Group Real Estate and PLYMouth Real Estate Capital until 2021 when the company was founded. Pendleton P. White Jr. is the president and CEO of the company, also since 2011. He was involved in the acquisition and syndication of several structured REIT in the past and also worked alongside Withrell as a ED for Franklin Street Property Corp. Also, prior to joining the company, he was the executive vice president and MD of Scoutland Camper Bard, KBR, and managed the funding of their real estate fund. In conclusion, it is recommended to add PLYM to the fund with a target price of $28.58 and with current price of $23.31, resulting in an upside of 22.58%. Please don't hesitate to ask any questions. Thank you.